Welcome to this week's episode of Your Stock Request for the 3rd of February. Hi, I'm Michael Gable, Managing Director at Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have Northern Star, Australian Vanadium, EMRL Payments, Charger Metals and Rocks Resources. So if you have a request, please send it through. Make sure you're getting the free newsletter every Thursday, but if you'd like our better ideas, you need to get the Dynamic Investor Report that comes out every Tuesday morning. But if you do enjoy these videos, I'd love you to share them on social media or even leave us a review. Our main business is in broking, so if you'd like to have a broking account with us and have us help you manage your share portfolio, then please give me a call. And all the advice here is general only. So we've got the chart here of Northern Star going back about 18 months, 2 years. As we could see, it's been in a downtrend for over a year now. It's halved in value. People tell me that in times of uncertainty, it's good to buy gold stocks as a hedge. I just don't see it. I mean, I just think that gold stocks are good when the price of gold's going up, if the business is growing their earnings. But as you could see from this performance here, as we zoom in the last 6 months, gold stocks are not a hedge against the market, in my opinion. We could see a series of lower highs, but most recently we've got this low here in September. At the moment it's trading above that low, so if we were to get positive on Northern Star, it basically has to hold above, firstly it has to hold above this low, base build a bit. But as I zoom out, I mean, I couldn't, even if this is a low, I couldn't get excited until it at least started pushing through about $11, because anything before that, you've basically still got a stock that's in a downtrend. Okay, Australian Vanadium. We looked at this one several weeks ago, so we had a sort of big spike up here on volume at the start of last year. Big sort of consolidation, and we spoke about, once it got through obvious resistance, you'd get a pretty significant rally. So we could see that earlier this year we did get that break, and there was a fairly nice move, but it was short-lived, and it was on big volume as well. So big move, big volume, which is good, but obviously recently it's struggled, so it's gone back under that breakout. Luckily it's then pushed above that breakout zone again. So in terms of an entry point, I think all of this is too volatile in my opinion. So I think entering here now, if you miss the break, I think entering here is a bit risky just in terms of overhead resistance and where your support is. I'd like to see these daily ranges settle down, so volatility can just compress a bit and we get something similar to this sort of price action, just die down a bit, and then there'd be a safer entry point. Otherwise, if you get a pop above January's high, then I'd be treating that as the buy signal. So two different types of buy signals: either it goes to break the old high, or we get a bit of a compression in volatility and then it starts moving again. EMRL, so look, overall price action still looks pretty poor with this one. I mean, most recently we had this, where this sort of, the range started to tighten up here, but instead of breaking that way, it broke that way, which isn't ideal. So break to the downside, it's recovered, but it's back at this sort of trend line resistance. So I think it's risky here. It really needs to show us that this was a false break, and it really needs to start pushing on up here. If it can do that, then it starts to look a bit better. Otherwise, it's at risk of hitting resistance here and then rolling over again. Okay, CHR, so this is all we've got. New listing. Look, the overall price action I think looks positive. You've got sort of massive rally on volume, and a sort of big sort of consolidation back on no volume, and then it's popped again on volume. doing all the right things. You know, it's come back a bit, started to sort of level out here, and then it sort of pushed up yesterday. So that looks quite positive. So it looks like it's starting to move again with the gap up and the close near the high. The only thing is, you know, volume wasn't that impressive. So I guess we'll have to see how this one goes. If I was trading this, I'd probably run a stop under this 80-cent level. But obviously we're going to get some resistance here. So if it can break to a new high, that would be the opportunity to add, and I wouldn't want to see it go back under 80 cents. Okay, finally Rox Resources. So to zoom out and put it all in perspective, big move up in April last year, big volume, then it's gone given it all the way up, given it all the way back. And then we could see this massive sort of gap up and rally on massive volumes. So, you know, that was the buy signal, that was the break out of the base. So that was the break out of this sort of basing formation. It hasn't kicked on. It is struggling, but we could see that the volumes have dropped off in the last few days as it has been pulling back. So, look, I guess I'd run a tight stop, you know, around these sorts of levels, and I guess we could see it settling down a little bit on lower volume. So I guess the next sort of big volume, big day up would be the next buy signal. All right, well, that's all for this week. If you have a request, send it through and I'll try to look at it next Thursday for you.